You're the guest of the moment. So is there a limit to how much Bitcoin you're going to acquire?
No, I've said we'll just keep buying the top forever. Every day is a good day to buy Bitcoin. We look at it as cyber Manhattan. I would have bought Manhattan 100 years ago, 200 years ago, every year for the past 300 years. You pay a little bit more than the person that bought Manhattan before you, but it's always a good investment to invest in the economic capital of the free world. You might as well buy it before it 100x's.
Do you think that Trump is serious about creating this Bitcoin reserve, and how would that work?
I think he is.
MicroStrategy co-founder and Bitcoin bull Michael Saylor discusses his prediction for Bitcoin and what price we can expect in the coming months after trillions begin to pour in. After the Bitcoin halving earlier this year, which Saylor says marked the beginning of an absolute surge in price, as we've seen multiple all-time highs for Bitcoin. Bitcoin is sitting just above 106,300, up over 17% in the last month. Saylor believes Bitcoin is about to make history, as we witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially and more than the daily supply. This has caused a never-before-seen supply-demand imbalance for Bitcoin. And Saylor says everything is about to change.
If you think about the Louisiana Purchase, California, and Alaska, we paid $40 million to buy 75% of the United States. Nobody remembers the $40 million. But if you know where the money's going, you should buy the property, buy the future. And in this case, the Lummis plan calls for 1 million Bitcoin acquisition. That's worth $16 trillion to the country. RFK proposed 4 million Bitcoin that would be worth about $56 trillion. There's room for Trump to go beyond that, even $81 trillion in gains. And that's against $36 trillion in the US national debt. So all the capital outside the US and all of the antiquated 20th century capital is going to flow into digital assets. It's going to flow into the Bitcoin network. And the logical thing is for the US to buy it now and own the future. Keep in mind, if you bought Manhattan from 1650 to 1700 a little bit every single year, it would have been a good acquisition. Right now, we can buy, the United States could literally buy 20–25% of the Bitcoin network, either by trading out its existing gold stores or just by borrowing a small trace amount of money. And so the Bitcoin network to go up by a factor of 100, you might as well buy it before it 100x's. You know, the world wants a digital assets framework, and the United States has a great opportunity to define a digital assets framework. We need to define the definitions of a digital commodity, a currency, a security, a token, an NFT, and an asset-backed token. And we need the rights and responsibilities of issuers and the exchanges and the owners. But that takes consensus from the executive branch, the House, the Senate, and the industry, and we didn't have that for the past 4 years. The opportunity for the U.S., it's to issue $10 trillion of digital currency and back the dollar. It's to capture $50 trillion of capital gain on the digital capital network. And I do believe with the digital assets framework that this administration could put forward, there's no reason why we won't see $500 trillion of assets tokenized over the next 21 years. And $280 trillion in capital flow into the digital capital network that is Bitcoin.
And where does that lead Bitcoin's eventual price?
My 21-year forecast is for Bitcoin to appreciate about 29% a year, ARR, to $13 million a coin by the year 2045.
I mean, your strategy is really interesting. You're really the first company to adopt Bitcoin as your primary Treasury reserve asset. Isn't that risky? Where does the risk lie, besides just in the price falling?
Well, 4 years ago, the accounting was toxic. It was indefinite and intangible, and it was unclear whether the SEC would embrace Bitcoin as a digital commodity, and it was unclear what the regulatory regime would be. That has been substantially de-risked in the year 2024. And so now, you really have companies on the Bitcoin standard where they use a digital commodity like Bitcoin, which is 60 ARR, 60 vol, or companies on the US dollar standard, which is zero vol, zero ARR. MicroStrategy is the largest holder of digital assets in the world now. We've got $46 billion worth of Bitcoin, and we're leveraging that.
Saylor confidently predicts that explosive growth is looming on the horizon, embracing an unyielding enthusiasm for the Bitcoin realm, as BlackRock and many other crypto giants are doing just that. Saylor reassures that a long-expected surge awaits as we head into 2025.
So what do you say to people who say, well, it's a Ponzi scheme, because every time Bitcoin goes up, you issue more equity and debt to buy more Bitcoin, it just keeps going and going and going?
Yeah, just like developers in Manhattan, every time Manhattan real estate goes up in value, they issue more debt to develop more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I would call it an economy.
This announcement out of Alphabet last week regarding quantum computing kind of refreshened that debate about whether Bitcoin or crypto encryption can survive long-term advances in quantum. How can it?
There's nobody more sophisticated with regard to encryption than the Bitcoin community. Satoshi was writing about this 15 years ago. The quantum benchmark that Google ran has no practical use in the real world right now. It's an impressive benchmark, but in fact, if anybody ever develops a super powerful computer that can crack encryption, it's going to be a challenge for Microsoft, Google, the US government, every company on Earth. And of course, the entire technology community is going to be focused on that. And when that happens, we'll all just upgrade our software with quantum-resistant algorithms. Right now, the consensus in the community is we're nowhere close to that being a threat. You know, the great opportunity in the United States is to issue the world's reserve digital currency. There's about $150 billion of stablecoin currency, and Tether is the leader. But they can't locate in the United States because we don't have a sufficiently clear regulatory framework for issuing digital currencies. If the U.S. normalizes that, there's no reason why U.S. banks and U.S. companies can't issue $10 trillion of digital currency backed by U.S. dollar currency equivalents sitting in U.S. banks. That would be tremendously good for the United States.
They don't want to threaten that with Bitcoin.
No, I'm not talking about Bitcoin. I'm saying that the U.S. should allow U.S. banks and U.S. corporations to issue a token backed by the U.S. dollar that would be backed by trillions of dollars of U.S.
Like a stablecoin.
Yeah, a stablecoin. Tether, Circle, they're stablecoins.
But isn't that a big threat to the monetary system, the Fed?
Well, if we actually normalize that, then there's going to be $10 trillion of demand for U.S. treasuries. It's the best thing you could do for the dollar. What it means is that all 8 billion people on the planet will be using the U.S. dollar on their Android phones and their iPhones in order to trade with each other. That would be great for American values and the American currency. Sarah, the point is people in Russia and China and Africa and South America can't trade with the U.S. dollar directly because they don't have U.S. dollar bank accounts. They're using Tether, and they're using Tether because they desperately want access to the dollar on their mobile phone. And right now, the U.S. doesn't have regulatory clarity that allows a U.S. corporation to issue a U.S. dollar-backed stablecoin that works for the Chinese, the Russians, the Africans, the Europeans. And so if the U.S. wants to be the world reserve digital currency, you don't want $150 billion issued by an offshore entity. What you want is $10 trillion of U.S. dollar stablecoin issued by U.S. regulated banks and U.S. regulated companies with the money onshore in the United States backed by U.S. treasuries. The demand is there. We just need a digital assets framework in order for that entire industry to come to life. We've now got more than $100 billion of open interest in our options market. We've got more than $100 billion market cap. We've got more than 100% volatility. We've been running 100% ARR for the past 4 years. And we're holding $46 billion worth of Bitcoin right now that's up 150% year to date. So I just think it's a tremendous milestone for us. MicroStrategy is an operating company, and because we have that $46 billion treasury, we can securitize Bitcoin using our treasury as collateral. So the bond market wants us to strip the volatility and the performance and the uncertainty off the asset and give them a lower yielding, more predictable instrument. And so we're the leader in that market. And when we do that, We create high volatility, high performance equity, and the equity in the options market wants that. So let me give you a little number here. Year to date, we have issued securities, both convertible bonds and equities, at a premium to our underlying assets that created a 72.4% BTC yield. That translates to a gain of 136,965 Bitcoin without dilution or cost. At 105,000 a Bitcoin, that's creating $14.38 billion in shareholder value. So how would you value a company that generated $14.4 billion in earnings a year, growing 100% year over year? And that's what the MicroStrategy Treasury operation is doing. If you're a Bitcoiner, you would love that.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem. Saylor challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, selectively measured to create desired effects, rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?